Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Oil rises as the United States and Iran exchange fresh strikes after a U.S. helicopter was downed, further testing peace talks. Stocks resumed their slide as tech shares remain under pressure and investors trim positions ahead of a key inflation report in the U.S. And while IPO mania takes hold in the United States, the Iran war derails a major Saudi listing. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Well, it's a sea of red when it comes to equities this morning. U.S. futures turning a little bit lower, 0.3% down. The S&P did close in negative territory yesterday. And there's a lot of factors in play here, right? The volatility that we're seeing, some of it stemming out of the geopolitical tensions in the Middle East, the prospects of the Fed possibly hiking rates, and then the AI trade coming into the picture. Asian equities also feeling the pain, 1.7% down, set for a fourth loss in 5 days. The Kospi is leading those declines. And oil prices, 0.7 higher, Brent crude at around $92 a barrel. Now, we keep monitoring the situation in the Middle East, but fresh hostilities in the region this morning. We'll talk about that later. The yield on the 10-year notes not doing much, 2 basis points, as we await the CPI report coming out later in the U.S. hours today. Now, if we flip the board, we take a look at a terminal chart that is quite interesting, courtesy of our colleague Anthony Stevens in Hong Kong. And look at that surge. This is the SOX, the volatility in the SOX index. Now, this is the index that gauges how semiconductors are faring. It is up more than 90% so far this year. And what Anthony points out to is this huge intraday volatility is without a clear driver and is a risk management signal that traders are rebalancing their books. So a gauge that we've been keeping a close eye on since March or April, and it's something to continue to keep an eye on with everything that's happening in the AI trade. And now, speaking of that, we've got Winnie Su in our Hong Kong studio to talk to us more about what is happening in Asian markets. Winnie?
Good morning, Abir. We are seeing investors turning more cautious today in Asia, especially ahead of the U.S. CPI numbers, as we've actually got those hot U.S. jobs data from last week, reinforcing the bets on the Federal Reserve to raise rates. And now you can see that Kospi here driving losses down more than 4%. But in fact, it was up about 8% yesterday. So lots of volatility and leverage in this market. Now, remember, that is still the world's best performing stock market so far this year. But today, leading the gains is actually the world's worst performing stock market so far this year, which is actually the Indonesia market. Here, up 2.6%, extending gains of about 7% from yesterday, coming after the Bank of Indonesia's surprise rate hike yesterday to support the currency. And hence, we are seeing that Indonesian rupiah rising, strengthening for a second day. Now, flip the board, we take a look at how, while we are seeing lots of pressure for the overall tech stocks in Asia, the bright spot is, in fact, in China's tech names. And that is coming after how we've learned last night that Beijing is preparing to spend about $295 billion for its AI build-out in the next 5 years. And that is supporting some of the data center names as well as the telecom names that are expected to keep these data centers all connected. Back to you, Abir.
Winnie, with those market details. Now let's turn back to the geopolitical story in the region. Iran has hit 21 aerial and naval U.S. targets across the Middle East. State-run Arab News reports that the IRGC targeted countries including Jordan and Bahrain. That is in response to U.S. strikes launched against Iran on Tuesday after President Trump blamed Tehran for shooting down an American military helicopter off the coast of Oman. For more, we're joined by Honor Ant, our managing editor for the Middle East and North Africa. Honor, ceasefire, no ceasefire, what is happening? Where does the latest leave us when it comes to the broader truce?
Well, there was a bit of a calm in the region, as you know. It lasted only about 24 hours, and that's mainly down to this Apache helicopter that we knew went down off the coast of Oman, as you pointed out the other day. So U.S. ordered strikes on Iranian military sites, mainly radar and control and command centers, that lasted overnight into Wednesday after Trump blamed Iran for downing that Apache helicopter. And in response, the Islamic Republic said it launched missile attacks, largely missile attacks at various U.S. bases in the region, including in Bahrain, Kuwait, and as you said, in Jordan. And it said they were all very significant targets. So what we have currently right now is that, well, there is no indication that the fighting is still going on as we speak. Both sides, especially the U.S., made it very clear that they concluded the strikes. So on the one hand, that's something to be somewhat happy about, and you can tell from oil prices that the market reaction has been somewhat contained on the expectations that both sides do not want to resume an all-out war. Yet on the other hand, every single bout of violence in the region shows that the truce that took hold about 2 months ago remains very fragile, and anything can happen as long as it is not translated into a lasting peace as part of negotiations between the U.S. and Iran.
And look, I was taking a look at the CENTCOM response to the attack. It was very calibrated, suggesting, as you alluded to, that we might not see a return to full-on hostilities. But why do you think President Trump sort of went ahead with this attack? Do you think it's something that he felt the need to do because of the helicopter that was downed, and then that's it? That's the moment we stop, just an attack, and we stop it.
Well, President Trump has made it clear that one of his red lines, at least as of recently, is death of American troops. Now, in that particular helicopter crash, no one died, but after pointing out the fact that the helicopter was downed by Iranian forces, it was Trump really didn't have a choice but to launch an attack on Iran in response. But as you said, what is important to note is that they were very careful about how they framed the attack. They said it was a proportionate response to Iranian aggression, and they said it has been concluded as of this morning.
Onur, thank you for those details and the latest on that story. Onur and managing editor for the Middle East and North Africa. Now, India has effectively frozen approvals for Elon Musk's space-based internet service Starlink to begin commercial operations. Bloomberg understands it's due to concerns over the use of its satellite terminals in the Iran war. The final clearances Starlink needs to launch have been withheld as New Delhi is concerned about its ability to control a U.S.-based operator during geopolitical tensions. Oil prices remain in focus as markets digest fresh U.S. and Iranian strikes in the Gulf. Brent crude briefly neared $93 a barrel a few hours ago before easing once U.S. forces said their strikes on Iran were complete. Joining us now is Jeffrey Sexton, Demeter Tactical Investments CEO. Jeffrey, thank you for being on the set with us. Now, let's start with the fresh round of hostilities that we've seen outside of the region. The market has been, I don't want to say complacent, you're the expert here. You can tell me whether the market has been complacent to those geopolitical tensions. But where do we get to a point where, those wider concerns about inflation and what the region is bringing about those concerns globally, where do we get to a point where we can definitively say this is the impact on global growth, this is the impact on markets widely?
First of all, thank you very much for having me. I'm going to use a very technical investment term called complacency. You just said it. The market's complacent. The market is shrugging its shoulders now. I think you see that in the Brent WTI spread is still around $3, which is historically, the narrow band, which is telling you that the market is not concerned that the oil is going to be locked into the Gulf forever. So when do we actually know it's over and its effect on global growth and the economy? When the Strait of Hormuz is actually opened and oil starts flowing. But at this point, what's being priced into the market is this sense of de-escalation. No one wants to escalate anymore. This tit for tat, shrug of the shoulders. You can see that in the Brent WTI spread.
Yeah.
So it is being complacent right now.
And look, typically at times of geopolitical tensions, when they're stoked, markets tend to go to bonds for safety. But we've seen the yields on global bonds massively surge in boons, in gilts, in U.S. Treasuries, also JGBs. What would it take to change that? And does the 60-40 portfolio sort of way of doing things change?
Yeah, 60-40 is dead for the foreseeable future. As you know, oil prices and interest rates both go up, they both go down because there is the stagflationary result of long-term rise in oil prices. And the concern that inflation's high, the Fed would have to raise rates. So they're moving in tandem. So the relief trade is on today, even though there were these overnight events. Now that both countries have basically said that was it, we're done, we're not doing anything else. This relief trade is kind of back on. The crisis is not over. The strait is not open, but there is no sense of escalation. So we are in this wait and see mode of whether or not the stagflationary trend is going to be there permanently or it's going to back down. And so interest rates and oil are both going up and down at the same time. That's unfortunately the pattern we're in right now.
So if I were to pin down two big themes so far this year, it's the geopolitical tensions in the Middle East and then artificial intelligence. And we spoke earlier about SpaceX coming to the market possibly this week. We have other big names, OpenAI, Anthropic also possibly coming to the market. When it comes to AI and the surges and the staggering number we've seen outside of the U.S., what do you think about valuations? How stretched are they?
Well, look, it's fun to see these things coming to market, finally. I am also a U.S. securities lawyer, so I have done these before. When someone is selling something, you have to ask yourself, why are they selling it to me? Why? Yeah, I want to buy it, but why are you selling it? SpaceX, Anthropic, we all know that these are hype trades right now. But the U.S. is way behind China. These companies have been going public in China for a while. So it will be interesting to see how they get priced. You need to let 1 or 2 or 3 or 4 quarterly earnings come through on these companies and really see where they are. But are they going to be priced as secular growth, or are they going to end up being priced more as cyclical companies? But right now it's hype and it's just excitement, and I want to buy it because I want to flip it and sell it tomorrow for someone else. It's a gambling trade at this point. It's not an investment, but it's fun, and the valuations are off the charts. Doesn't mean you're getting something that's worth what you're paying for it. It's just going to be fun to say that you got shares in SpaceX. Does not mean that they're worth what you paid for them. They're worth what the next person will buy it from you for.
So at times like this, how do investors distinguish between what are the genuine metrics leading to a bubble? And my other question, I guess, is do you think then after that answer, are we in a bubble?
Well, the definition of a bubble, one man's bubble or one woman's bubble is another person's game on. And look, here's the problem with the general U.S. stock market right now. It looks like this beautiful red Ferrari that's flying down the road, and it's amazing, but you don't realize the brakes don't work. And sometimes that doesn't end well. So this is just... Here's my fun question. What are all the Bitcoin bros doing now? We're not talking about crypto anymore, are we? Now we're talking about SpaceX, and we're talking about AI. So it's the next latest, greatest thing. Is it a fad? Is it a bubble? Look, a bubble can expand for a long, long time before it ever pops. So we're in the early stages of how the real stock market will treat a real AI company that has gone public and really does have to report quarterly earnings. And there will really be attention paid to earnings. And are these people really making money? Or are we all buying this hype that we all apparently want to live on Mars one day, and that's why you should buy SpaceX? Like, nah, I'm not so sure about that. So whether it's a bubble remains to be seen, but I will tell you that it is a Ferrari going down the road really, really fast, and you don't know if the brakes work on that car or not.
Well, there you go. A Ferrari going down fast. Jeffrey, thank you for being on set with us today. That was Jeffrey Sexton at Demeter Tactical Investments CEO. Now, still ahead, China's consumer inflation unexpectedly stalled in May. We'll dig into the details of that ahead. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Now, China's consumer inflation unexpectedly stalled in May. The consumer price index climbed 1.2% from a year earlier, just below estimates. Let's bring in China's correspondent Minmin Lo to discuss the details of that report with us. Minmin, I guess just walk us through the breakdown of that report.
Yeah, you mentioned the CPI. It came in slightly below estimates, flatlining compared to the previous month. But then the PPI actually had accelerated to 3.9%. This is the highest number that we had seen since July of 2022. It was in line with estimates. And a lot of it is because of the impact of the Iran war, right? You have oil prices remaining elevated. You have commodity prices higher. So that's fed into higher costs for the upstream industry. So things like the mining sector, factory gate prices going up by 15%. But then if you look at the further downstream industries, the factory gate prices for consumer goods, for example, actually turned negative by 0.8%. So what this tells you is that consumption sentiment still is remaining quite lackluster, right? And these consumer-facing factories are not able to pass on that higher cost to consumers. And that's why we are still seeing the CPI lagging behind at about 1.2%. So this is a supply-led inflation rather than demand-led, which could be quite concerning for the longer term.
So what in turn does that mean for the policies that China could conduct, Minmin?
Well, the fact is that we are still seeing a pretty positive print overall, right? It's putting an end to this 3.5-year-long deflationary streak when it comes to the PPI. So it also means that when it comes to monetary policy easing, perhaps there is less of an urgent need for that. And we're already seeing the impact there on the bond markets, right? Yields are climbing, and some analysts are saying that we could see the cyclical floor to the 10-year bond yield, although because of the lackluster consumer sentiment and the slow growth in credit growth, that could still delay any structural steepening of the yield curve. And also, if you look at the trade data that we got yesterday, a lot of China's growth is now dependent on on the more advanced manufacturing sector, which is less sensitive to price increases. So when it comes to the impact on the yuan, for example, that also means that the government might tolerate a gradual strengthening of the yuan as well.
Yeah. That was Bloomberg China correspondent Minmin Lo with the latest on those inflation details. Now, coming up, Anthropic CEO Dario Amodei says the use of AI in war is broadly positive, but still comes with risks. That is next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Anthropic CEO Dario Amodei says AI use in war is broadly positive, but risks remain amid uncertainty and human error. He spoke exclusively to Bloomberg's Emily Chang for the latest edition of The Circuit.
Bloomberg has reported that Claude is being used by the U.S. military in the war in Iran to do AI-assisted targeting via a platform made by Palantir, Maven Smart System. In February, a U.S. missile reportedly hit a girls' school in Iran, killing more than 150 people, most of them children. Did Claude play a role in that strike?
We don't know exactly how, these models were used. Obviously, these things that mistakes that happen in warfare are really, really terrible. Like, this is a really terrible thing to happen. we were willing to risk the future of our company to like limit how, these models are used. And, what you're talking about is a use case that doesn't even violate our red lines. We're worried that there will be 100 times as much, with use cases that do violate our red lines. Now, again, I would say I think overall the use of these models is appropriate. I think it's good on net, but military decision makers make terrible mistakes. Even at the best of times, and I don't know if we're in the best of times. What we've seen here is Claude assists, but a human makes the final call. So a human made that final call, not Claude. Imagine if you had a world in which, not Claude, because we haven't allowed it, but someone else's AI model, the AI model just makes the decision and the human never sees it. That's what we were standing up for. That's what we were fighting against.
This school had a website. You could have found it in a Google search. Like, shouldn't Claude have spotted that? And does it speak to a scarier issue about using technology as a shortcut in war?
The principle that was obeyed here is a human makes the final decision. I don't know what role Claude or any other AI had, but like, if this isn't an illustration why that principle is so important, I don't know what is.
You can see that conversation in full on a new episode of The Circuit with Emily Chang. Subscribers can access it on the terminal and on Bloomberg.com from 8 a.m. Eastern Time later today. Now for a look at some of the other stories we're following this morning. Shares of US-based AI server maker Supermicro fell in extended trading after it announced plans to raise $7 billion through a package of equity offerings. The proceeds will be used to purchase components needed to fulfill customer orders for its AI servers. Supermicro says it currently has around $39 billion in outstanding orders. Nintendo's shares fell by the most in a month after the game maker's presentation of upcoming releases fell short of expectations. The firm's stock fell as much as 8.2% after it failed to unveil brand new titles from heavyweight franchises such as Mario at its Nintendo Direct presentation. And Bloomberg understands Starbucks is considering options for its Japan business, including a potential stake sale. We're told the coffee chain has held preliminary talks with investment banks as it reviews the business, one of its biggest markets with around 2,100 stores. A listing is also said to be under consideration. Now, a quick look into where markets are doing this morning. Equity futures in the United States, 0.3 down. Same story for the Nasdaq and the Dow Jones. We're seeing slightly lower Euro Stoxx 50 futures. Oil prices only slightly ticking down after the hostilities in the region. Now, coming up, the U.S. and Iran exchange fresh strikes, putting new strain on an already fragile ceasefire. We'll discuss what that means for the region with Rachel Ziemba, founder of Ziemba Insights, next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Oil rises as the U.S. and Iran exchange fresh strikes after a U.S. helicopter was downed, further testing peace talks. Stocks resume their slide as tech shares remain under pressure and investors trim positions ahead of a key inflation report in the United States. And while the IPO mania takes hold in the U.S., the Iran war derails a major Saudi listing. That's next. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Markets still turning lower by the minute, as it seems. U.S. futures 0.4% lower now. Now, the S&P did close in negative territory yesterday. Multiple reasons are leading to this. We're talking about stretched valuations. We're talking about a pause in the AI trade. Yet again, the geopolitical tensions out of the Middle East. And then this possible possibility of the Federal Reserve hiking rates, it keeps looming. Asian equities feeling the pain this morning, 2.3% lower, led by the Kospi. Those losses led by the Kospi, still one of the best or the best equities gauge this year. But today, Asian equities not doing very well. Brent crude prices, the price on that is $92 a barrel, 0.8 higher because of those fresh rounds of hostilities that we're seeing out of the Middle East. Just this morning, Iran attacked countries in the region, including Kuwait, Bahrain, and Jordan, after the United States attacked areas in Iran. Now, the yield on the 10-year notes not doing very much, 2 basis points higher as we await the CPI report out of the United States later today. Now, let's turn the board and take a look at what our teams have been working on when it comes to chart making. And this is volatility in the SOX index. Now, this is the index that gauges how semiconductors in the United States are performing. And it's been doing pretty well this year, up more than 90%. It saw some stabilization in recent days. But what our colleagues point out to in markets is that this huge intraday volatility in the SOX index without a clear driver is a risk management signal that traders are rebalancing their books, essentially. So something to keep an eye on as we look at this whole AI rally in markets. Well, let's take a look at how Asian markets are doing this morning. We've got Winnie Su in our Hong Kong studio. Winnie?
Good morning, Abir. We are seeing more pressure on the Asian stocks today as a loss is really extending on the MSCI Asia in the afternoon, now down more than 2%. And as you just mentioned, we are seeing the Kospi leading the decline, now down about 6% after having risen 8% yesterday. So lots of volatility there. And in fact, it just triggered a selling halt on the Kospi just now by the South Korea's exchange. So that shows you how volatile the market really has been. But today's bright spot is actually in the Indonesia market, up about 2%. And that is coming after that surprise rate hike by the Bank of Indonesia yesterday. So extending a bit of those gains since yesterday, with a bit more support coming through for the currency as well. Now you flip the board, we take a look at the Japanese assets, because when we look across the board, it really is the tech stocks still leading declines, and hence Nikkei 225 underperforming the broader Topics gauge. And in fact, we are seeing Topics' bank stocks, in fact, rising today. So really outperforming on further bets for the Bank of Japan to raise rates next week. Now, that expectation is also reinforced by today's PPI numbers. So pretty strong numbers driven by the higher energy costs. We are seeing it jumping by 0.4% compared to the previous month, but on an annual basis, in fact, it is rising at the fastest pace in about 3 years. When it comes to 30-year yield, we are seeing pretty much fluctuating here. We did have pretty weak bond auction just coming through earlier today, and that is driven by the yields really coming down in the past few sessions. Back to you, Abir.
Winnie Su in our Hong Kong bureau with those details. Now, U.S. forces carried out strikes against Iran hours after President Trump blamed Tehran for shooting down an American military helicopter off the coast of Oman. Former Australian ambassador to Washington, Dennis Richardson, says it's critical that America must win this war against Iran strategically and not just militarily.
It'll be important for the end of the peace process to have something in place which is better than the Biden-Iran agreement. We should never forget that whatever frustration we might have with President Trump in terms of the beginning of the war, in terms of the way it's been conducted, in terms of what he might say on a day-to-day basis, it's in our national interests, and I would argue it's in the interests of Western countries generally, for the US to emerge the strategic winner.
Joining us now is Rachel Ziemba, founder of Ziemba Insights. Rachel, thank you for being with us this morning. It's a pleasure to have you on. Look, I mean, the flare-ups this morning that we saw across the Middle East, we might not see a return to full-on hostilities, but I want to know what it means really for demand destruction. That is something that you talk about. We're not at that point yet, but more than 100 days into this war, the Strait of Hormuz is still effectively shut. When do we get to a point where we can say we're headed towards that direction of destruction?
Thanks, Abir. Pleasure to be on with you, even if the context. So we have seen some demand destruction, just we've seen more supply held back, right? So the markets are not in balance, and we're drawing down strategic reserves. At this point, the prices are higher than they were before the war, but not meaningfully. And so that's not sending the same price signal to consumers to cut back. And policy and price-driven demand destruction in Asia is still moderate. So I think over the summer we would see more pressures. And you're right, we're just seeing a trickle of flows coming out of Hormuz, and all of the flows that we're seeing, are really using evasive techniques that don't seem sustainable. Now, of course, we are seeing a bypass. We are seeing some effective supplies getting to market through other channels, but it's just not enough. And as strategic reserves are drawn down, I think we'll be in a tougher position.
And look, you spoke about this briefly, but at the beginning of this war, we were talking about that by this time we'd see Brent way higher than it is. And then there's the paper price and the physical price of where oil barrels are. But why do you think that Brent prices or oil prices generally, because we're seeing same movements in WTI, not ticking up higher? Do you think the market is not reacting as it should to those geopolitical headlines? Is it too complacent?
So I think the market is responding to the two things. One, that there is more light sweet crude than heavier sour crude. Both WTI and Brent are those lighter, sweeter crudes. But it's also, I think, responding to the fact that strategic reserves are being drawn down, notably in the US, even to some extent in China. China is a key piece of this. They stopped filling their strategic reserves. That was a significant part of their imports last year. And they seem to be tapping in. So ultimately, I think refiners have gotten used to this time of managed scarcity for now. But today, we're at a level where the U.S. strategic reserve is the lowest it's been in more than 40 years. Japan's is at a similar level. We can't keep drawing those buffers. So if we zoom out a couple of months, I think we'll be in a tougher position.
And look, energy transition has emerged as an important topic over the past few months or so. So I want to ask a little bit about it. Energy security generally has reemerged as this dominant policy concern. Do you think that we're shifting to prioritizing that and the resilience of those supply chains instead of the transition that we've been talking about over the past few years or so?
Yeah, I think we're focused on energy security, on economic security, on localization of supply chains. And so that does mean that more solar is being installed and even wind in some locations because there's not a need to keep importing new supplies. But we're also seeing more coal and nuclear is back in the picture. So to the extent we are seeing renewables going in, especially Chinese clean tech, which is benefiting, this is a story about economic and energy security rather than a transition goal. And of course, we're seeing the impacts of climate change on volatility and demand. So, but at the end of the day, I think we'll continue to see entities move away from their net zero goals.
And look, just to touch on the economic aspects of things, we're also seeing that sanctions, export controls, industrial policy, those are being used more and more as tools of statecraft, really. So when do you think, at what point do you think economic competition becomes fragmented or so fragmented that it starts weighing on wider economic growth prospects?
So I think in some sectors it already is. We are seeing a lot of investments in critical minerals. We're seeing investments on clean tech, even on semiconductors. But that's where I think we will see in the coming months as China uses its own export controls in that area and outbound investments to limit the transfer of intellectual property. So at the end of the day, this is an environment where businesses face more compliance costs and there are more frictions in trade. And people are still waiting for what the new tariffs are going to be once these 301 investigations are complete in the United States. It makes it difficult for businesses to plan what their costs are going to be.
Yeah, that's another thing that everyone is keeping an eye on, tariffs as well. Rachel, thank you for your time today. Rachel Ziemba, Ziemba Insights Founder. Now, a Florida trading company says it's in advanced talks to send Cuba the biggest cargo of U.S. fuel since the Eisenhower administration. Vanguard Energy is gearing up to export 250,000 barrels of diesel and gasoline. Company president Matthew Klan says the fuel has been designated exclusively for the private sector rather than state actors. Hong Kong Financial Secretary Paul Chan says efforts to restrict cross-border capital flows negatively impacts the U.S. In a fireside chat at the Bloomberg Invest Hong Kong conference, Chan weighed in on the upcoming SpaceX IPO.
I think that this is detrimental to your U.S. interests. Why don't you welcome the liquidity from all over the world? Yeah, I think this is for us. When you look at Shanghai, look at Shenzhen, we have huge number of excellent tech companies at very attractive valuation, waiting for investment. No matter it is IPO or private equity, VCs, or even patient capital. Nowadays, through the Hong Kong IC, we have been channeling sovereign funds from the other jurisdictions and long-term funds to co-invest with us into industries of the future.
Now, before we head into the break, just some flashes across the Bloomberg terminal. Korea's Kospi extends losses to 6.1%, with its second biggest constituent, SK Hynix, falling 9%. So that is contributing to the wider weakness in Asian equities this morning, 6.1% downward for the Kospi. Now, coming up, protests erupt in Kenya over plans to establish a U.S.-backed Ebola quarantine facility. That is next. This is Bloomberg. Protests have erupted in Kenya over plans to establish a U.S.-backed Ebola quarantine facility. The unrest highlights growing public concern over the outbreak in Central Africa, even as Kenya says it has not recorded a single Ebola case. For more, I'm now joined by Bloomberg East Africa Bureau Chief Helen Nyambura. Helen, why are Kenyans unhappy about this quarantine facility?
Hi. Yeah, just for the simple reason that there have been no reported cases in Kenya. In June alone, we've had 2 days of protests and 2 people killed in those demonstrations against the U.S. quarantine and isolation center at Kenya Military Air Base. Many protesters say that the U.S. should build such facilities in countries that have already reported infections. And currently, that's just the Democratic Republic of Congo and Uganda. So by building such a facility here, Kenyans are concerned that the disease could be imported into Kenya, and Kenya doesn't have the specialized facilities for an outbreak of such a contagious disease, while the U.S. has spent hundreds of millions of dollars beefing up its biocontainment capacity. So Kenyan protesters are demanding that the U.S. should use those facilities back home for its citizens.
And how is the government there really handling their Ebola response, Helen?
So Kenya has received $13 million from the U.S. to set up about two dozen isolation and quarantine facilities, one of which is that American facility at the military air base. In addition to this, it's also training nearly 1,000 workers, medical workers, for the response, and it's beefed up its surveillance and monitoring at border posts.
Bloomberg East Africa Bureau Chief Helen Nambara with those details on Ebola. Now, Zambia has received enough support from bondholders to buy back its 2053 debt in full. That is after offering an extra $65 million to pull in a group of holdout creditors that were resisting the transaction. A successful buyback of the $1.36 billion of bonds will clear the way for Zambia to proceed with a debt for development swap. The IMF says Nigeria should keep monetary policy tight to curb inflationary pressures from the war in the Middle East. The fund raised concerns about a $5 billion debt swap, warning it would undermine central bank independence. The IMF also described the deal as opaque and lacking transparency, cautioning that the high collateral and possible margin calls introduce additional fiscal risks. South Africa's economy grew more than expected in the first quarter, despite early headwinds from the Iran war. GDP expanded 0.5% in the 3 months through March, beating median estimates of economists. However, data also showed signs of weakness, with household spending slowing sharply, with fixed investment declining. Now, coming up, the Iran war has put the dampers on a Saudi firm's plan for a multi-million-dollar IPO. The details on that story next. This is Bloomberg. Saudi Arabia's Mutlaq Al Ghawari contracting company has postponed plans for an initial public offering, due in part to concerns over the impact of the Iran war. The deal was set to be the first major Middle Eastern listing of the year, raising as much as $799 million. Now let's bring in Bloomberg's Middle East Equity Capital Markets reporter Laura Gardner-Cuesta to talk to us about the details. So, Laura, the details, what happened there?
So I think it's fair to say there was an impact from the Iran war. So during the book building last week, our sourcing suggests that some investors asked to be scaled back. So remember, this is when we started seeing the Kuwait and Bahrain headlines. So the subscription levels were actually quite low for a Saudi IPO. Single digits. We're used to like double, triple digit subscriptions. So obviously this created some concern around aftermarket performance. And, I think it's fair to say that the Iran war had an impact. I think there's other things as well that we should keep in mind and that are more Saudi specific. In Saudi, companies have six months to list from the moment they get CMA approval. So MGC's approval was expiring in end of June. So it creates a bit of a use it or lose it situation, because you might ask, why would you go ahead? But this really means you have to do it, otherwise you have to go through the process again, and it's just a bit of a
yeah. Well, it was lose it in this case for the time
exactly.
But look, how does this delay affect the wider IPO plans for Saudi Arabia and the region, and how does the war impact those prospects?
So actually, Saudi was looking pretty promising. The TASI has actually outperformed other stock exchanges in the region because Saudi is seen as a bit more insulated. It has more export routes. However, a lot of companies were looking at this deal because it was the first significant deal out of Saudi in almost a year, not just because of the war, right? So it's something that companies were closely watching. So I think we know they're continuing with preparations. RFPs have been sent out during this period, but I think the conversation will be, will we do it post-summer? You know, be a question of like timelines being reevaluated. So I guess we'll see.
We'll have to wait and see. That was Laura Gardner-Cuesta with the latest on those IPO stories. Now, for a look at some of the other stories we're following, private credit lender Blue Owl Capital is opening an office in Abu Dhabi. The firm joins Wall Street peers that are continuing to expand in the Emirate despite tensions stemming from the war in Iran. The alternative asset manager's new outpost will serve as its regional headquarters and house members of its institutional capital and general partner stakes teams. Brookfield and BlackRock's global infrastructure partners are among firms shortlisted for a stake in Kuwait's pipeline network. The deal could raise as much as $7.5 billion and is seen as a test of investor appetite for Gulf assets amid ongoing regional conflict. The deal indicates sustained interest for Gulf assets despite the ongoing war that's roiled energy prices globally. And Emirates President Tim Clark says the airline will bounce back strongly from the disruption caused by the war in Iran. Clark said Emirates has no intention of scaling back operations and warned European airlines to, quote, watch their backs. He also renewed calls for greater access to international markets as the airline looks beyond the oil crisis. Well, let's take a quick look into markets before we head out for the day. Equity futures in the United States turning lower by the second 4/10 lower at this point. Euro Stoxx 50 futures barely down 0.1% lower. The stories in oil really today. Brent prices ticking lower this morning because of the fresh rounds of hostilities that we saw coming out of the Middle East this morning. Brent at 92 almost, NY crude higher as well. Now, that is it for Horizons Middle East and Africa. I'm Abir Abu Amar in Dubai. Stay around with us for Daybreak Europe. This is Bloomberg.